Alrighty. Um, yeah, the reason why I went long this morning was just because of this. And the only thing that I was hesitant about was just because we were sitting inside of we had this daily OB, but then the 4 hour, right? Sitting inside this small gap. And then just whenever price has this large, like we already hit EQ the range, right? So we're in the premium 4 hour for value gap. And the first thing I noticed this morning was that there was SMT between the 6 hour candle between ES and NQ. So NAS took the high, while ES didn't. So ideally, I mean, yes, we're still in a bullish market, but when you have this large of an expansion, I don't love to sort of just blindly long afterwards when the entire move didn't get rebalanced. So now, like, since we did rebalance some of this, we could be expecting higher prices later in the week, but kind of a toss up since the higher time frame doesn't really have much here to me. Um, so bullish market, regardless, you don't typically want to be targeting a high that was formed at a key time with SMT, and unfortunately, that's what this high was that I was trying to target. And I was trading before 10 a.m. news, which I knew, but all I was basing my trade off of, which I alerted this morning, was just this hourly FEG, and ideally, it was really just the London low that had my interest. So London low swept at what? Key time, 9:30. Have a nice displacement move. This is the only reason that I took the trade, is because the expansive. We talk about reversals are confirmed with expansion. So expansion lower, expansion higher. Expansion met with expansion normally confirms the low. And I also looked at the lower time frame on the 1 minute. I believe there's SMT here. So the yeah, ES put in a low at 9:30, and then NAS puts in a low at 9:31. So I had that as well on my radar. And then I looked at the 3 minute and just took the first 3 minute CSD here. And we also left a 3 minute FEG. So I was anticipating price could fill that in. Ideally, it stays open. It just barely tapped into it and then went higher. I didn't like how we took out this high and then had a sharp rejection lower, and as well as ES was very lethargic here, and YM, I saw YM starting to turn, and YM is kind of like a precursor for kind of being able to anticipate where price is going to go, even though it's not always correlated, but over the last few months it has been. So you can kind of, there's a tweet that I can hopefully find, I'll show you guys later, but that was why I was completely okay with moving my stop to break even, because ideally this low doesn't come back to, and that's not where my entry price was. My entry price was right here, so I could have been stopped out and my trade still could have been valid. But ideally, when you have this amount of stacked highs, you should just be flying through this, especially with this sort of reaction down here. So that's why I was comfortable moving my stop to break even, and then I ended up getting break even there. I actually got slipped on the 10 a.m. news, lost $100 on my account. Somehow, Top Step X bugged and I made like 200 per account. So I'm just I'm grateful for that, but just got lucky on that. But that is why I went break even. And then this is the trade that I missed. That Alex was in my Discord earlier, and I literally told him to take puts. I don't know why he didn't, but understanding that the 10 a.m. news didn't continue the potential 9:30 Judas swing after taking out London low, and this is also a 5 minute CSD, so you can see works the same, but just not exploding through the high again. And this was already that SMT high, so I wanted price to break this. Failed to do so. 10 a.m. goes lower, and then 10 a.m. we're not waiting. We don't need the this CSD just because we already kind of understand that time isn't supporting higher prices. So as soon as you get this, the tap, honestly, you could have just shorted here, but this is more my style of an entry. So I would have just shorted the 50% of this wick. So that's normally what I do when I have this sort of weird looking OB. So I would have been short here, stop loss at the high. And then the main interest that I had was just this low here. And then I also had the EQ of the entire daily range marked out of the daily candle. That was like the second draw. But this just, all, the last hourly swing low was where my goal was after understanding that higher prices weren't going to be happening. So you can see 2R would have been smacked very nicely, and then trade ended up going a little over 4R if you would have held runners. But this is just a beautiful continuation entry signature. And the 3 minute, this is what I mean by you didn't have to wait for the 5. Delivering out inside of a bearish FEG, and then you get the 3 minute CSD. Obviously, you don't want to be entering a new position right before 10. If you're still in one like me on a funded account, I'm going to take the chance. Live funds, I would definitely not recommend doing this, but 10 a.m. goes lower, and then you can see the retest of the OB. And then you could actually use this as a lower time frame breaker as well. High, low, higher high, lower low. And you can see this is left open as a breakaway gap due to the order block and the breaker. Hindsight, yeah, but 5 minute CSD here is the cleanest in my opinion. And this is something I want you guys to look at, because this is how you can identify true breakouts or not. So see how this is London low, right? Old London low. Important. Also, what is this low? 930. Two important lows only because of the key time, not because of where they are, etc. Only important because of the time. See how price closes below and then uses all of these wicks and such. And now this 930 candle is a breaker as well. So high, low, higher high. I can put this on. High, low, higher high. Closes below, lower low. Breaker, this could be an entry. As soon as we close below, you could be shorting the low. Stop loss should be, honestly would be for me right here. Or you could even squeeze it a little tighter, which you could do since price is showing you that it's weak because it's leaving open the gap. But regardless, you would have had a nice 2R trade lower. And I wasn't looking at the time, but I was highlighting these lows because when we close below old lows and then use them as resistance, that's how you identify as a true breakout and use them for support, etc. I believe it happened on gold. Yeah. See London high? See how we create a 5-minute FEG above, or even a 15-minute after breaking this high? That's where I'll go over this trade as well. But that's what I mean. We're breaking through the high, leaving a FEG, and it's even cleaner on the 5-minute, and that's why I was also interested in taking this trade to previous day high. And yeah, that was it. I didn't end up touching indices after that. I got my lucky $200 per XFA, and then lost 100 on my other accounts, but I didn't take another trade. The gold trade I missed was just this. Super simple. Higher time frame. Let's go back. Daily. This is what I meant, Boss Hog. Why I told you to just be careful and like don't chase sell side liquidity pools. Just because price is in a ranging bullish market. And I did anticipate this low to be the low of the month, or whatever it was at the time. And I believe it was, because this is the new, yeah. Wait, actually? June, July, oh no. I expected, this isn't the low of the month, but I expected this to stay protected. I knew this low could have been taken, but this is the last line of defense. Like if we would have broken this and then closed below, then that's when I would have looked for lower prices. But this is Big down close candle takes an important swing, closes above. That's why I was bullish again. And most likely this will probably get hit. But deriving our bias from the higher time frame, just using our simple 4-hour fair value gap, nothing crazy. Again, kind of just following order flow. Hourly, what happened overnight? We just run short-term lows, still sitting inside that 4-hour fair value gap on the higher time frame. Kind of barely close above it or below it. Then I go to the 30-minute. Not anything really significant for me to try and find a trade. So kind of just let that go. We knew we had 10 a.m. news. Again, 9:30 is validating that this low should not be taken. Why? Because it's continuing the expansion that we already expected. This was not here yet. So this is our first important area. And you can see we have smooth stacked Asia high as well as previous day high. So if you weren't a trade prior to this, I would not recommend trimming realistically until this high, just because of the framework on the higher time frame. But regardless, that's not the main point. For intraday moves, especially in New York session, I like to wait potentially after a key liquidity pool gets taken. London, I'm waiting for a 15-minute or higher fair value gap, order block, breaker, any sort of PD rate to get retapped into. And then I'm anticipating the continuation signature to show itself, right? What do we have at 10 a.m.? We have 10 a.m. news. What does price do? Well, initially opens high, and then it opens lower, doing what? Sweeping the short-term low, which is that 15-minute fair value gap. And then you just get that classic continuation signature right here. And this is literally where I was going to long earlier, but I couldn't. And my stop loss on this trade would have been just the 50% of this wick, just to squeeze a little bit better RR. And anticipating that we are going to go higher, we know that this is now going to be a breaker, or it should be a breaker. And ideally, once you get this expansion, this low shouldn't come back since we do close above the high. So low, high, lower low, higher high, now a breaker. So you could be entering here as well. Just the RR's obviously skewed now. And we are trading the weaker asset. And I'll go over the silver trade that I could have taken, or I should have taken, honestly. But this is just that classic continuation signature. Waiting for time. Being patient, right? A logical level, London high, for price to form some sort of reaction at. Also, what's above a daily or 4-hour fair value gap. I believe this is a daily bearish fair value gap. So you can anticipate that acting as some sort of resistance. And all of that plays out, but we are understanding that the previous day high is so close. Asia high is right there, and we're still pretty early into the day. So there's no reason why this should fail, and if it does, this is a perfectly okay loss in my book. And also, to go back to what I said earlier, London high being closed above, large fair value gap being left on the 5-minute, and just showing you that the old highs is being used as support, and then price goes higher. So that was the gold long. And then we can look at the silver trade, and this was honestly where my interest was before gold, just because this is such a classic New York AM futures trade on either gold or silver, because they love doing this little 930 Judas and then offering that CSD. And so again, this is kind of what I was looking at. So silver's the stronger asset, it's been leading for a while. Weekly order block tap, that's what this orange line is. How do we confirm that this is a confirmed reversal? Well, we have expansion met with expansion, and we also have that 4-hour CSD here. So if you pretty much want like an A plus, like 90, I'm not even gonna say a number, but just a stupid high win rate. If you have a weekly key level being met, and then a daily or a 4-hour CSD with expansion, and then couple that with SMT, if there is it present, it's if you're trading shares or something like that off of that, or elite position, it's almost like free money. The win rate on that has to be retarded. If you want to avoid bad moves, just use the 4-hour to confirm the actual CSD or not. Of course, with the higher time frame context, but we all know that. Regardless, this is why I was bullish on silver. Understanding that we're not going to stop at this high after the 4-hour CSD occurs. We're going to most likely run inside of this 4-hour for value gap, and you can see more stacked 4-hour highs. And the higher time frame is still bullish, so there's no reason to continue to look for lower prices. So higher time frame framework is once again identified. What comes after consolidation? Expansion, right? What do we have? We have lows being rejected, PD arrays getting created, down closed candles getting closed above and being used as support. You guys can see every low being taken leads to some sort of what? Consolidation, expansion, consolidation, expansion, consolidation, expansion. So, what did I do? Looking at the 30-minute, what does 930 do? That is where my main interest was this morning. And this in itself was a trade as well, and I wasn't actually looking at the 30-minute, but this is a classic signature all the time. 30-minute FVG, one of my favorite time frames. What do we have? Just some sort of short-term low on the lower time frame. We also have this down close candle you could use, but this is not my favorite sort of order block here. But it does. Any sort of expansion move should be supported by any down close candle that runs out a short-term low or it rebalances in inefficiency. But my main focus here would just be the 30-minute fair value gap and then what 930 does. Dropping down in the lower time frame, you can see this is a perfect signature. Short-term low cleared out inside of the 30-minute fair value gap. We get the CSD here. Clear as day. Easy money. I was looking at NQ this morning, so that's why I didn't take this initially. But I saw it a little kind of too late and then hesitated. But it is what it is. 4-hour fair value gap up here. That's what this first black line is. Enter on the closure or the retest, whatever you want. And then we have a lower time frame breaker as well, supporting price. And we understand that now this low should not be returned to. So yes, you could have your stop loss here, but ideally, especially once we close above this up close candle here, or the swing high, I'm anticipating just the candle bodies to be enough stop loss room. What is 10 a.m. news? So even if you wanted to wait for 10 a.m., could open low first. That's exactly how you want a bullish candle to form. And then you could take the second continuation entry, which is just perfect, right? The 3-minute open lows, closure above. You could enter on that. And then you guys can see it just absolutely rips. So 2R easily smacked from the first entry if you wanted to wait, or if you didn't want to wait for 10 a.m. news. You can see this trade ran to the 4-hour for value gap. That would have been 3.5R. And then from here, this is my entry. This would have been my entry. Would have entered at the 50% of the wick. Stop loss here would have been at the low. Understanding once again, same signature, right? Just a different time. I want you guys to kind of look at this and understand. Right, same exact thing. What does 930 do? Open lows into a short-term low into a 30-minute fair value gap. Same thing, just on a smaller time frame. What is 10 a.m. news? Our next key time. Open lows into what? Now this time a 3-minute fair value gap. We can clean some of this up. Into what? Down close candle, 3-minute fair value gap. What are all these? Stacked short-term swing lows. What does it do? It offers us a continuation entry here. Same signature as the open, just on a smaller time frame. I would have entered off 50% of the wick, stop loss at the low. You can see 2R would have been smashed, and then went a little under a 2.5R trade if you would have held for the 4-hour for value gap. But that is everything that I saw today. I just wanted to review that with you guys.